Welcome back to the channel. I'm Keith. This is Crypto Bullseye and this is Helium. We're on the daily chart today and this is going to be an educational one. I'm going to show you how you can build rules into your trading strategy to give you that edge in the market. It can be as simple as possible, but I'm also going to show you how maths work, how Fibonacci levels stick time and time again. I'm going to give you lots of examples. So first and foremost, we're going to learn how to protect ourselves, how to use the appropriate risk management, and how you can build rules into your system. This is the most important thing, building rules into your system and sticking to them, because that's the only way that you're going to get an edge in the market. If you don't stick to your rules, you're not going to get an edge. You're not going to be able to record the data because it's going to be a scattergun approach. It needs to be rules that are built in that you stick to time and time again. We're going to go over there, and the most simple one that you could do is a trend line and a trend break. So the first thing that you'll be looking for as your first rule is going to be, what direction is the trend in? We can look at this, guys, and we talk about time frame analysis. This is the daily chart. We're on the daily chart. So in the daily, what are we doing? We're creating a higher high. We've come back and we're creating a high, a low. This is higher. This is higher. So we're creating a higher low. What does that tell us? We're in a bullish trend. What about if we go down into the 4 hour? What happens if we go down at the 4 hour? What would you say there? Top left, bottom right. That's telling us we're in a bearish trend. So in the shorter time frame, we're in a bearish trend. We're looking for a continuation of trend. We're trend following. We want to follow the trend because the trend is our friend until the bend at the end. So make sure you understand what your correct time frame is. If you can only look at the charts a couple of times a week, then you want to be on the higher time frame, the daily, the weekly, and that can be your thesis. Higher time frame, your weekly. The daily is going to be your trading time frame. If you can only look at the chart once a month, then you're looking at the weekly as your trading time frame and the monthly as your thesis. What bigger macro trend are you in? So make sure you understand how many times can you be at the charts. Understand what type of time frame that you're looking for. So we're not in the 4 hour, we're in the daily. And in the daily, we're making a higher low. So that's bullish. So what do we do now? We're going to build in the most simple rule that you can do. And I'll show you what this allows for. So a simple trend line from its top all the way down here. And you can see time and time again, this was rejected. So this is while we're in the pullback. This is when we're in the 4 hour. This is more apparent that we're in a pullback, creating a lower low, lower high, lower low. You're creating a lower high, lower low. And you're following the trend down. You're following the trend down. But what's it doing? It's telling you can't do anything until you've broken trend. You can't do anything until you've broken trend. So what happens once you've broken trend? This is the next rule. You apply your stops, you apply your targets, and you apply, more importantly, your entry point. Where are you going to enter? Where are you going to exit? And where are you going to protect yourself? So as an example, we break trend. You can be a trend break, you can be a trend and retest, because what often happens is it needs to come back and test support. So you've broken trend, you've retested, and then you add in your risk management. So what does this allow for? Once you've broken trend, you know that the bulls have regained momentum, you know that momentum's on your side, your rules are taken, and not just your rules, guys, everybody else that's a trend breaking trader, their rules are taken. That puts the buy orders in the buy order level order book. That pushes the price up because more people are buying. And that's exactly the psychology behind how it works. So we're going to break trend. There's lots of traders. They're going to get interested. Breaking trend, people are interested. The buy orders pushing the price up and pushing the price up and pushing the price up. So the next thing we want to know is, where would our exit level be? And then, is it worth taking? So our exit level, and this is just me, I'm looking for the top of the candle close from the previous high. So I'm not looking for the wick. Don't care about the wick. I know that that's not a sticking point. What happened here with the wick? What happened here? Price got pushed back. Price got pushed back. So I'm not interested in wicks. I'm more conservative. This has got a higher probability of happening. And this, if we were shooting for the high of the wick, that's got a higher probability of not being taken. This is my sticking point. That's where I'm interested. Right, okay. Protection. This is just important. Entries, stops, and targets are all just as important as each other. You need to know exactly what kind of capital you're willing to risk. So this is the low. This is the low. That's sitting at $2.86. on Helium, $2.86. I want to give myself a little bit of wiggle room just underneath there. Then the next thing that I need to do is I need to look. This hasn't happened yet, guys. We're waiting for this to happen. It's looking like we're getting a bit of momentum. I'm going to show you something else on the chart in a minute that's showing me that. You're looking at that 4.95 risk to reward. So if you took that 5 times, and you won once, you'd break even. If you took that 5 times and you won twice, that means you're profitable. If you took that consistently over a period of time and you won twice out of 5 times, you've got a massive edge in the market and you're going to have some capital behind you. So if you can do that, hats off to you guys. So all the psychology behind it, you don't feel the same when you're in a trade, and you have to train your mind to be emotionless, right? So that's a hypothetical scenario that I'm waiting to look for. Is there any additional confluence that's telling me, is there any additional confluence on the chart that's telling me that Helium's looking like it's going to break? I'm going to get rid of this. Don't want to overload it. Get rid of that. Right, okay. We've got the RSI up here. Let me just pull this up. What's the RSI telling us? Let me just make this a bit clearer. Stick that in white. What's the RSI telling us here? First and foremost, this, you've put in a lower low here. This is the low, and then you've put in a higher low. So the RSI is telling us this is buying and selling pressure. So if you've got your rules where you've got a trend break, you might have additional rules built in, which is going to give you a higher probability. It's going to give you less trades, but it's going to give you a higher probability of a success rate. So we've got a bullish divergence here. How do we know this is a bullish divergence? What's price action doing? Price action has put in a lower low and then another lower low, where we've got a higher low here, and we've got a lower low here. So that's telling us something, that the buying and selling pressure, the buyers are actually winning as far as the RSI is telling us. The buying and selling pressure is on the bullish side. The price action chart is not reflecting what the buy and the sell orders, get my words out, guys, what the buy orders and the sell orders are telling us. So that's positive. That's a divergence. We know what needs to happen. We need to crack trend. We know where we can protect ourselves below the low once we've cracked trend. What happens if we pull back again down here? What happens? Nothing happens. It's been happening all the way down here. So nothing happens. You're waiting for the same thing. You're getting it at cheaper prices. You're waiting for the crack trend. You know you're protecting yourself below there. You know your targets at the previous close of the previous high. And it's as simple as that, guys. You can build in rules. If that was your rules, you need a divergence. You're waiting to crack trend. You've got your stops below the low. You've got your targets at the highs, and you've got your entry point exactly where you need it. What wouldn't be a good entry? Let's go over an example of what wouldn't be a good entry. Let's say one of my rules is that the break has got to have a candle close outside. So that gives me extra confirmation. That gives me extra protection, because quite often you'll see something that looks like this. You get a break and it'll push back in at the end of the day. So if this closed at the end of the day, for example, up here, then would you take that there in the middle of there? No, you wouldn't, because what would that do to your risk management? Putting that below the low, shooting for the high, what would that do? 0.35. So you need to calculate this into your strategy, into your rule system, that you need to have a minimum of X amount of risk to reward. I like to have a 1.4 to 1 risk to reward as a minimum. Gives me that little bit of an edge. As long as you get a 50-50 win rate, that 1 to 4 risk to reward is good. So, right, okay, let's talk about extensions now. Let's talk about Fibonacci numbers. Let's talk about maths in trading. Get rid of all this, clear all this up. Why Fibonacci levels stick? Why do Fibonacci levels stick? I don't know. The magic levels that do stick. Right, okay, so what we're going to do is put a Fibonacci from its swing low down here, to its swing high up here. And we're going to look to see what happens at certain levels within this Fibonacci. So you can see, first and foremost, you can see how the levels are respected. Look, you've got this build up of price action here between the 382 and the 0.5, a build up of price action. You've got a rejection at the 382. You've come back down. You've created that lower low. You've created a lower high by having a rejection from the 0.5 level. That slammed through, respected the 786 as support. We've had a big buy up, and then you've created another lower high, and then followed trend down. You've taken out this previous low. You've put in a new lower low. Look where we're hovering to now, 886. What does the 886 coincide with? 886 coincides exactly with the previous high before we broke trend. So that is going to be our last ditch attempt. And this, if price does pull back to this level, you might think that's bad. That's bloody good to me, guys. That's a strong support there. And if we bounce from there and crack trend from there, I'll be a happy bunny, guys. I'll be a happy bunny. Further it pulls down, the higher the risk to reward, the tighter the risk to reward you get to have. That means that you're risking less capital, and that means that you're gaining a lot more for exactly the same amount. So it's not always a bad thing. We're looking at this one. It's got a bullish divergence on there. We're waiting for it to crack trend. It's going to be as simple as that. What else can we do, guys? Just wanted to show you how these things work, how these things pan out. So what we want is to know exactly how high we would go if we broke this previous structure high. I said that I'm conservative. I said that this would be my targets for a trade, but how high would we be expected to go if we made another leg to the upside? We can just stick a fib on from its high here down to its low here, and we can make projections from there. You've got your 1618, that's sat up here, $12.59. So that's going to be another key area, $12.59. I'm not shooting for $12.59 yet, but let's see if that is similar to the increase from the previous high. Let's have a look. You've got 16% to the upside there. And from here, you've got 13% to the upside. So that's realistic, the 1618. We're not talking about these extension levels yet. We've had a really deep retracement. We've nearly kissed the 886. That's too much of a deep retracement for me. But if we're going to shoot to test this high and at least double top at this high, then that's going to be good enough for me. It's got a good enough risk to reward attached to it. So if you did learn anything today, guys, or if you want to learn anything in future videos, let me know in the comments what it is you want me to cover, and I'll be happy to. I'll see you guys in the next one.